Welcome to the Evalesco Healthy, Wealthy and Happy podcast. The information provided on and made available through this video and podcast does not constitute as financial product advice. The information is of general nature only and does not take into account your individual objectives, financial situation or needs. It should not be used, relied upon or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decisions in relation to your particular requirements or circumstances.
Welcome to the Evalesco Healthy, Wealthy and Happy podcast. My name is Jeff and I'm your host for today. And I'm very pleased to be joined once again by Evalesco insurance guru, Paul Liu. Welcome back, Paul.
Thank you, Jeff. Good to be back.
Today we're talking about income protection, which is a very vital and sometimes well used and sometimes misunderstood insurance. So we're going to take a deep dive into that. But as we always do, I want to start with checking in, Paul. What have you been doing to be healthy and happy lately?
So recently have started playing tennis again. I used to play just every Sunday socially with my uncles. And then COVID happened and that kind of shut everything down. Also getting a little bit older, knees started to hurt a little bit more, but we've had more than enough time to recover from those now. So just having a little bit of fun getting back out onto the tennis court, which has been great.
Excellent. We had a tennis event as a team last year and I can vouch that Paul's got some skills on the court. So it's good to see you putting them into more common use. Good on you. So today we're going to dig deep into income protection. So to kick us off, what is income protection?
So broadly speaking, income protection is a policy that replaces our income. If we suffer an injury or an illness, that means that we can't work in our regular occupation, we can't earn an income. And that injury or illness, it can be either a temporary condition or even a long-term, more permanent condition. That means you might never come back to work. So the income protection policy, its intention is to replace income to help you with your living expenses if you can't work to earn an income yourself.
Great. And why do you think that's so important to have that type of cover?
Well, our ability to earn an income really is our most critical asset. If you lose that ability, then that means that you can't afford to pay for your bills, your living expenses. Your very livelihood is basically at risk if you can't earn an income anymore.
Yeah, and I think sometimes a temporary disruption to income can create a long-lasting effect, can't it? You can have a plan in place and be working towards some really great goals and thinking you're doing well, but an interruption to that can really derail things.
No, you're absolutely right there, Jeff. And I think most Australians don't have enough savings to last more than a couple of months if they had to stop work due to a serious illness or injury, not to mention the additional medical expenses that might be incurred and while you're trying to recover from that condition. So the income protection really provides that vital support to keep things afloat, while you're spending time off, you're taking time off work to recover, so that you can continue to pay the debts. You're not necessarily forced to draw down too heavily on your savings in the meantime. And even if we do have enough money to last us a short period of time, if you have to draw down on the mortgage and use up all of your savings to get through that tough period, it is going to take a fair effort to get back to where you were previously.
Yeah, absolutely. What are some of the things people need to think about if they're considering taking out income protection insurance?
So income protection, for me, there are three main components. You have the monthly benefit itself, you have a waiting period, and then you have the benefit period of the policy. Now, the monthly benefit is effectively how much the insurance company is going to pay you every month while you are unable to work. Okay. With most policies today, the maximum coverage you can have is 70% of your gross income, excluding your superannuation. The reason why the insurance companies want to cap it at 70% is, well, it creates an incentive for people to want to return to work as well. So if you could imagine, at least for me, if I could receive 100% of my income and not have to work, I might be tempted to try to stay at home for a little bit longer if I could. So the 70% is the maximum that most insurance companies will offer when you're applying for income protection insurance. In addition to that, you can also apply to be covered for your superannuation guarantee contributions as well. So you'll receive 70% of your base salary, and the superannuation guarantee component of the benefit, that would get paid directly into your nominated super fund. So in a way that helps protect your lifestyle, continue to cover your regular expenses, and it also protects your retirement as well. So it continues to grow your superannuation. If you happen to be on a long-term disability claim, there is some assurance there that in the long term your superannuation continues to grow, and there's something to support you from retirement age onwards.
Yeah. Is that 70%? Do you pay tax on that?
Yes. So if you are receiving an income protection benefit, that benefit is assessable at your basic marginal income tax rates. So you have to allow for that. The insurance company doesn't normally deduct the tax as you would normally, when you're receiving your PAYG. It is up to you as the individual to set aside some money so that when the tax man does come around at the end of the financial year, you've got some money to pay that tax bill as well. The other thing that sometimes we do is we typically suggest that a person should be covered for their maximum insurable benefit on their income protection. If you're like me, you're spending a pretty significant chunk of your income on debt repayments, living expenses. Our lifestyle tends to grow to reflect whatever income that we're earning.
Yep.
And so for me, anything less than 70% of what I'm earning now is likely to cause a little bit of financial distress, right? But in some cases, a person might be in a situation where, they can afford to have less insurance, and we'll talk with our clients about that to say, okay, if something really bad did happen and you couldn't earn an income, what's the minimum level of income you would need to be able to cover your expenses? And that's just one way of balancing, the need for having the right level of cover and the cost of the insurance as well. So that's a discussion that we tend to have with our clients regarding income protection. Next is the waiting period of the policy. So waiting period is unlike the waiting period that you might have on your private health insurance, which just means that for the first 3 months after the policy starts, you're not covered. Waiting period on an income protection policy is like an excess that you might have on your car insurance, for example. So if I have a 1 month waiting period on my income protection policy and I have an accident and I can't work for the next 6 months, then for the first month of that 6 month period, I need to be able to look after myself. The insurance company doesn't pay any benefit for that 1 month waiting period. And we'll talk to our clients, we will ask, what type of leave entitlements do you have from your employer? What kind of savings do you have that you could draw upon or would be willing to draw upon in the event that you couldn't work? Can you draw down on your mortgage? What other sources of income do you have to cover yourself during that waiting period? And so for the first 1 month, I wouldn't receive anything, but for the next 5 months, the insurance company then pays me that monthly benefit, and it pays in arrears until I'm well enough to return to work.
So you effectively got to cover yourself for 2 months in that scenario, because you don't get the money until the end of the second month.
That's right. And then finally, you've got the benefit period on the policy. So the benefit period basically determines how long that insurance company is going to keep paying you for. In most cases, we would recommend or suggest that a person has a benefit period to age 65, and that just means that if you suffer a very severe injury or illness and you can never return to work, that policy is going to keep paying you a monthly benefit all the way through until age 65, basically protecting your lifestyle until you are able to access your superannuation and other government disability benefits, pension benefits as well.
And that's really important in the context that if you're only getting 70% of your income as a maximum.
Mm-hmm.
That, as you said before, not a lot of room for savings in most scenarios, but
Yeah.
having that super benefit tops it up is really good, but you're not going to have anything to rely on to live off before you're able to access your super, probably.
That's right. That's right.
Yeah.
And just to add to that, sometimes we will pair income protection with total and permanent disability insurance as well. So your income protection can be used to cover your day-to-day living expenses, whereas your total and permanent disability cover covers the big ticket items like the mortgage, some of the chunkier medical expenses that might be incurred. And that in some ways can create a little bit of space for you to still save some money, to still invest some money so that you've got a little bit left over for retirement purposes and for other unexpected expenses that might be incurred along the way.
Yeah, and that's the case where it's a serious illness or accident which is causing you to be, longer term. If you're going to be on claim from, 50 to 65, then the total and permanent disability payout may be a stronger possibility than if you're off, for 5 months, you're not going to be accessing TPD.
Absolutely, yeah.
Can people and should they take out income protection through their super?
You can take out income protection through your super fund. Most super funds will offer income protection. There are some caveats though. So when we're taking out income protection inside super, it will be limited by assist legislation. So one of the main caveats is that in order to receive an income protection benefit from your superannuation fund, you must have ceased gainful employment due to an illness or an injury. Okay. The fine point there is if a person happens to be in between jobs, unemployed, at the time the disability event happens, there is a chance, there is a risk that the insurance company will say, well, technically you have not ceased gainful employment and therefore you do not qualify for a claim under this policy.
Right.
It would seem like a very rare thing to happen, but it's actually happened to one of our clients, unfortunately. Right. So this gentleman, income protection inside super, happened to be made redundant towards the end of last year and is in the process of interviewing to get a new job. Mm-hmm. But he's also had to have some pretty major surgery in the meantime. Right. As well. So unfortunately for him, the policy is not going to pay any income protection benefit. The other thing that we might want to be careful of with policies inside superannuation in general is with industry funds and retail funds alike, it is the trustee of the super fund that has the ultimate discretion as to what type of benefits are provided. From time to time, the trustee of the super fund may deem that it is appropriate to change the terms of the policy, and it could be through negotiations with the insurance company where they remove some of the benefits that you previously had. And as a member of the super fund, you don't really get a say as to whether you want to accept those changes in benefits or not. So there's a risk that could happen, and depending on your circumstances, you may decide that this is an acceptable risk. The policy is good enough for me, I'm willing to take that, or you could consider something that's different to that, where it's a retail policy owned by you personally, in which case the insurance company does not have the discretion to change the terms, at least not without your consent.
Yeah, that's a good tip. I think it's one of those areas where it's quite complicated. Once you start digging into it, you probably can get access to information, but how do you tailor that to your specific needs and understand what's important to you, which is where the value of advice really comes into it. So
absolutely,
I would certainly encourage you, if you're thinking about it, if you've got income protection and you want to check on whether it's right for you, or you're thinking about taking it out, come and have a chat to Paul, because he can help you, I guess, shortcut some of the research process, but also dig into what's really important to you in taking out that cover.
Absolutely.
Any final words?
I think income protection is probably, out of the whole suite of insurances that a person can take, you've got your life cover, total permanent disability, trauma, and then income protection. It's probably the most important type of cover for a person to have. It is ultimately about protecting your livelihood, your ability to cover your own expenses, to do the things that you normally do and that you provide for your family. Protects your own sense of independence as well. So income protection for me is probably the most important one out of all of them. It also helps that income protection premiums are tax deductible, so that's sometimes a little plus when it comes to tax time.
Yep.
But ultimately, it is, with our client base, the most sought after type of insurance that's available.
Fantastic. So pretty clear call to action there. If you don't have income protection, you really do need to consider it. Reach out and talk to Paul. If you do have it, make sure you give it some thought as to whether it remains relevant in the structure and the actual policy terms. Maybe another opportunity to reach out to Paul or to your advisor to have a chat through that. But thank you very much, Paul, for sharing your expertise as always.
Thank you, Jeff.
And everybody home, thanks for tuning in. Have a great day.
Thanks for tuning in to the Evalesco Healthy, Wealthy and Happy podcast. If you'd like to learn more about anything you've heard in this episode, please give us a call on 02 9232 6800 or email admin@evalesco.com.au. Make sure to subscribe to our channel for more Evalesco podcast episodes and stay up to date by following us on Instagram and Facebook.